Hello, everybody. I'm Peter Grant with Zaner Metals in Denver, and this is This Week in Metals. My colleague right over here, Peter Thomas. How are you this morning?
I always love it when he points his thumb the wrong way. I always give him a jazz, a little bit of a stick at
You
the
know
end of
what?
the show.
It's counterintuitive on Zoom. That
But I
is
got
the
you again,
direction to you.
baby. Called
So I
stage right,
usually do
stage
it the
left of
wrong
show
way,
business.
and it's really that
I know.
way.
There you go. You got it. All right.
Yeah.
So welcome everyone. Thanks a lot for visiting with us. Welcome to Chicago on my side and Colorado on his. We've had an amazing week, and we're really looking forward to filling you in on what happened.
Yeah. So let's start with gold. It's always at the top of my list.
Me too.
And gold had a good week, up 2.7%.
Right.
However, it was an inside week, so we traded within the previous week's range.
Right.
Ended strong, though. Uh,
Think you should underline strong. Pretty amazing performance considering.
yeah, considering. So the bulk of the gains came in the wake of the Fed's decision, basically to hold steady on rates, but keep the foot on the gas pedal.
Right.
For sure in terms of liquidity. And then, some talk about, yield curve control and that type of thing. So uh, the gold market still looks really good. We thought last week that we could see some additional corrective action,
Right.
everything held up nicely. I think the market was sort of reluctant to kind of prosecute that sell-off that we saw in the previous week
You call it a
ahead of the
sell-off. I
Fed.
call it a train wreck. But between the two, what we 1,875 points down, and gold managed to close strong. We saw no liquidity or run to liquidity. A lot of times when you get a big stock market crash, you get people selling off gold. This time I was rather surprised. Gold saw a lot of
Resilient.
selling, and it's selling in ETFs, Pete. We saw a lot of people taking money out to cover margin calls and things like that in this enormous break we had in the market, but it held pretty well.
Yeah. I was impressed with the resiliency for sure. So I think it sort of the low at 1670. I think sort of reinforces the low end of at least the short-term range,
Yeah.
which is probably actually down more around 1660. Again, a strong close. Um, I still like 1795.90, which is the high from 2012. So 18, let's call it 1800, shall we?
Yeah.
And but of course, the May high at 1765.35 is the level we need to get through to kind of put us back on track for that 1800 level.
I think those are good points. I think we'll watch them next week, and there's no question that if we take out those technical points, a contracyclical summer rally could be a very frightening thing to anybody that's short, and anybody who is waiting to put inventory in their vaults. As far as central banks are gonna have to bite the bullet. So those are very important numbers, and we'll watch them next week. And why don't we move right into silver?
Silver, slightly higher
Yeah.
last week, up 0.36%. Again, an inside week. We did trade back above $18, but faded
Right.
into the weekend. Uh, Again, I'm still generally favorable to the silver market. What I like about it is that while we have seen a little bit of a rebound in the gold silver
Ratio.
ratio,
Hmm.
the gains are anemic. And
Right.
so again, I think it's a corrective in nature, the losses in silver and the rebound in the ratio. So
Yeah.
I remain pretty optimistic.
Well, the
Um,
ratio had two radical days last week. One, gold rallied about $18, and silver was about 20 cents lower at one point, and they just blew that thing apart. And almost similar the second time. So the ratio has had some pretty big whips in it. But at the end, I will tell you, the Fed released a number, the mint, as to sales, and we sold 25,000 more pieces of silver last week than we did year on year. So demand maintains strong underlying support. with the public. And demand, I will tell you, you and I both deal with refiners and recyclers on the wholesale side. Demand is still strong for product in there. So I'm generally favorable to the underlying, which is people still need silver.
Yeah, I would agree with that, and to that end, I'm still keeping my eye on the high for the year in silver is 1895. So again, let's round it up to the big round number, shall we, and call it $19.
Sure.
But we've talked in the past that $20 is sort of the real appealing level, I think, and uh,
You shall see.
I still like that general area in
All right.
silver.
Well, what about PGMs? It was kind of
Yeah.
quiet in there. We saw a little bit of an uptick in car sales, which always increases demand, but generally speaking, choppy and still a little firm. What do you think, Pete?
Actually, both platinum and palladium closed modestly lower last week,
Yeah,
1.6% in platinum and 1.8% in palladium. But platinum still, it's tracking the 100-day moving average,
right.
just kind of edging lower within, again, what we've identified previously as a bull flag formation. Uh, Palladium and so platinum I'm still generally favorable on as well. I think it
Good.
as the economy again continues to make those lurching steps towards normalcy.
Sure.
I do think that there's a lot of pent up auto and truck demand
Yeah.
that's going
A
to be
lot of truck
generally
demand with the
supportive,
wings. Yep.
and so I'm still favorable platinum.
Okay.
Palladium, as we discussed last week, the
Right.
volatility I think maybe has some people spooked. So we're consolidating in a very broad range that emerged. I mean, the sell-off in March in the early stages of the COVID crisis was hair-raising.
To put it mildly, and
Yeah.
the thing is that if you're one of our hedgers, we're still going to maintain our posture that we had had in copper, which is if you're thinking about now's the time to sell some of your product, call us. Let us help you pick some support and resistance
You
points.
jumped ahead to copper on me, my friend. We were still
Well, I
talking
just
about
sort of
palladium.
slipped it right in there because it is next, my buddy.
Yeah, well, okay, so let's move on to copper. What a
Yeah,
great week in
monster.
copper.
Oh,
And so copper ended up 3.2%, but it
yes,
was up twice that at one point during the week. It was the
absolutely.
fourth consecutive higher weekly close. And even though it sold off rather dramatically on Thursday, specifically, it rebounded nicely on Friday, and
Direct
ended up with a
reaction to the stock market crash. We saw everyone going, "Oh my God, nobody's going to buy another toaster, another washing machine," and they went in and hit the copper, and it was just a knee jerk reaction. So no surprises. Okay.
yeah, but people were inclined to buy it up, man.
Yeah.
So we traded almost 270. I think it was on Wednesday
Yeah.
last week.
It was shocking. Yeah.
Briefly above the 100-day moving average, which is always encouraging. And while we couldn't close above the 100-day moving average, again, I think the rebound on Friday, I think we're going to probably see additional tests up there. So it still looks pretty healthy. And they always say, Dr. Copper, if you want an indication of the direction of economic growth, copper's about the best
Not
indicator.
even a question. And we did a great show with our friends at United Metals Recycling. And in that show, we said, hey, guys, don't be short here. And once again, we got lucky. And it proved that we saw another monstrous rally.
At at
And,
some
and
at
I
some
hope our
point
scrappers are there. I hope they come to us.
at some point, Pete, people are going to realize it's not luck. You're a, you're a professional, my friend. You've been doing this a long time,
So
but
I
but
think that
modest.
pretty much wraps up. Other than the fact that I will tell you that we're still seeing all of our users, real quickly. I don't mean to bore our generalized investors, but we're seeing good demand in solvents. So the underlying of copper are very strong. Asia is still consuming heavily. The yuan still has some strength in it. They're using that strength to buy metals and underlying fundamental metals, everything from zinc on down. So let's watch the metals for next week and see if the strength continues.
Yeah. Some of the data that came out last week, we were particularly interested in readings on inflation, and they were a bit of a mixed bag. CPI was a little bit softer than expected for May, down 0.1%. Unchanged was what the market was looking for,
Right.
but a little bit of boost in PPI, up 0.4%, again where unchanged was expected. Um, Import and export prices were better than expected. Uh,
Yeah.
im- Export prices were up 0.5%, slightly better than expectations, but import prices were up 1%, about twice what the market was expecting. So maybe a little spidey senses are tingling on inflation a little bit. What do you think?
Well, we've got some numbers if I'm right here coming out in England. Why don't you fill us in on that? And because I think that's going to be an indicator as to what's going to happen next week in the EU.
Well, UK growth got hammered in April. It was down
Right.
20.4%.
I think it's one of the biggest falls they've had since World War II.
No, it is a record. Yeah.
Yeah.
So I mean it's a pretty staggering number that to
Yeah.
think that in a month that your economic growth could lose a fifth.
Yeah.
You know.
Oh, yeah. So if we have to see, I mean, what do you think now that we've seen that number and it shocked everybody? What do you think they're going to do?
Well, the Bank of England announces policy this week. And I think they have to do something. They're not going to move on rates, but uh, probably more guilt buying, I would think,
So
for
you're
sure.
looking for an interjection of pounds because they're now on the pound system and subsequent shot in the arm to the general economy. There's your inflation if that you were intimating to, which means that maybe we're going to see stronger gold continue in the EU because they have really led the way in Europe.
Yeah, depending on how aggressive they are with
Right.
additional QE measures, we
Yep.
could definitely see the British pound get hit pretty hard,
Yeah,
uh,
I'm
and
thinking the
and
same.
um, and so gold should benefit certainly in terms of pounds, but that is likely to translate through into uh, gold gains against the dollar as well, I would think. Um, we also saw wholesale sales out last week, and they were a lot worse than expected, almost down 17%, where a 10.3% decline was expected.
That was
So
kind of a surprise.
there's still a lot of weakness. Um, Consumer sentiment rebounded a little bit, came in at 78.9%, the preliminary reading for May. 75 not percent, the reading was 78.9, 75 was expected, but that's up from 72.3 in May.
I think the reason that number is significant as we go into the close here, we're looking at rioting in the streets, looting, people declaring free zones of free of law, and any intimation from a government in Seattle, and a lot of craziness going on, and shops being burned, and consumer sentiment rises. I think that tells you that if you ignore the news and pay attention to what's going on around you, more people on the train, more traffic in the streets, you realize that hey, this is going to get better and get better soon.
Yeah. Well, uh, the Fed's not too terribly optimistic. I guess further out they are. So the Fed
Yeah,
announced rates this past week, and as expected, they held steady, uh, keeping their foot on the gas pedal in terms of liquidity. But the interesting thing that I was looking forward to were the Fed's projections. So they expect GDP to fall 6.5% this year, but then and unemployment to be at 9.3%,
right.
but things improving in 2021. So they expect GDP to rebound 5% in 2021 and the unemployment rate to drop to 6.5%. Um, so, uh, I guess the optimism is a little bit further out down the road, at least in terms
Right.
of the Fed. And so again, this was not unexpected in terms of the policy decision. And I guess the one thing that was maybe a little bit unique is we're hearing a lot of rumblings about yield curve control in terms of keeping yields at a
See
certain
that?
level,
Yeah.
particularly the longer end of the curve, to keep yields down.
Yeah, and we
Uh,
would just watch the 30-year and you'll have there's your barometer, right?
yeah, yeah.
Yeah.
Um, uh,
I,
Liquidity is really in the 10-year, so
and
that's the one I like to watch.
I think in closing we need to address the COVID-19 looks there tons of rumors about it coming back stronger. I seriously doubt it. And the climate's wrong, the temperature's wrong. I think people are smart enough now. Everybody's masked up, gloved, and spraying everywhere I go. So I don't see this enormous bounce back that the fear mongers are out there spreading. And I think we're going to see a very, very healthy market here shortly.
Well, let's hope so. And so let's to wrap things up. Let's look ahead at this week. We're the highlights are going to be May retail sales.
Right.
Um, they're expecting a 6% rebound in retail sales from the minus 16.4% that we saw in April.
Okay.
Um, Industrial production only expected to be slightly lower, minus 0.1%,
That's a good.
versus,
I'd love to see him hit the brakes on the IP. That would be a nice indicator.
yeah, that's versus minus 11.2% in April.
Right.
We'll see housing starts. And then, as we already mentioned, the BOJ and the BOE announced policy this week. So we'll be keeping our eyes on that as well.
That's a biggie. Yeah.
Um, but overall, I think the metals look pretty decent,
They look
especially
healthy,
the
they look
safe havens.
strong, and they've held pretty well. So I think we'll wrap it up. This is Pete Thomas in Chicago saying have a great week. Next week looks like it's going to be as interesting as last week, and trading's going to be wild. So be ready and call in, get your hedges in. Make sure Pete will tell you where to get. You can buy precious metals online from us. 40 years in the industry, you can be sure you're going to get what you order versus the little pop-up stores when we see these rallies. And hedgers, if you're not with us, scrappers, if you're not with us, it's about time you called us. Give us a like and give us a follow.
Thanks so much, Pete. I'm Peter Grant for Zaner Metals in Denver. Have a great week.
You too, Pete.